This video will describe the process of creating a Fiscal Checkup account and interfacing your QuickBooks Online account to the Fiscal Checkup input wizard. For those customers that use QuickBooks Desktop or Enterprise, the process of interfacing is different, and you are encouraged to watch that video. On the Fiscal Checkup website, in the upper right-hand corner is a link to log in or create a new account. On the next screen, if you've created an account, simply enter the email and password for the account and click on Login. To create an account, click on Create an Account. To create an account, you must first enter your first name, last name, a valid email address, and a password. Passwords must be a minimum of 8 characters. You will be asked to establish the account name for the profile. Note, if you're a consultant or an accountant, this is likely the name of your firm. It can be different than the name of the company being analyzed. Once you click on Register, Fiscal Checkup sends an email to validate the email address. Simply go to the email account specified in the profile and open the email. You may need to check your spam mailbox if you don't see the email. Within the email, there's a link to confirm the account. Simply click on that link and you will be redirected back to the site, ready to begin the process. To start the analysis for a company, simply click on New Report. Fiscal Checkup offers a free Industry Comparables report. If you select this option, then click on Continue to Wizard, and you will be asked to input up to 5 Naics codes, and you will be able to print your free report. If you select the free Industry Comparables report plus the company report card, you will be asked to input a company name to place on the top of the report card. Once you click on Continue to Wizard, you will be asked to pick up to 5 Naics codes and asked to input data for 3 balance sheet accounts, AR, AP, and inventory, and 4 income statement accounts, revenue, cost of goods sold, operating expenses, and net profit. You will need data for at least 3 years to receive a meaningful report card. If you select a full company report, you will be asked for the name of the company. Then, clicking on Continue to Payment will bring you to the payment screen. On this screen, you will need to pay for the analysis with a credit card. When companies purchase multiple analyses, they are given codes to redeem, 1 unique code for each analysis they have purchased. Once you click on Pay with Card, you will be taken to this screen to enter the credit card number, expiration date, and CVV code. Once the transaction is approved, you will begin the process to input data. The wizard starts with this screen. If you have completed analyses on more than one company, click on Reports in the upper left-hand corner, and you will see the list of companies that you have created. If you select the company you want to work with by clicking on the Edit button in the right-hand side. You can also create a new report for a new company. If you do not have any prepaid licenses or codes, Fiscal Checkup will ask what type of report you want, and if appropriate, start the payment process. Also near the top, you can click on Settings. This allows you to select a file with a logo that will print on the title page of each report. Throughout the input wizard, there is a help desk. You can type in a question or a term, and the software will give you the closest matches. If you click on a question, Fiscal Checkup will give you data on the question or term that you entered. Finally, the Wizard Start screen, you can download a PDF document listing every data field in the wizard. It is sometimes easier to prepare before you begin the wizard, especially for the subjective company and market-based questions. The next step is to choose whether you will be importing data from QuickBooks or entering data manually. This video is addressing the interface with QuickBooks Online. To begin the process, click on Connect to QuickBooks. Then you will need to sign into your QuickBooks account using your QuickBooks credentials. QuickBooks will then ask you to authorize Intuit to securely share your data with the Fiscal Checkup application. Once you authorize access to the data, you will see this screen showing the data is being imported. Once the import process is complete, you will see this screen. There are 12 accounts that Fiscal Checkup needs to perform some calculations that may not have exact matches in the QuickBooks chart of accounts. The first 6 are listed here. Scrolling down shows the other 6. You may not have all of these accounts, but if you do have some of them, mapping the relationship between QuickBooks and Fiscal Checkup will automate the flow of information. These mappings are saved. You will not need to change this screen unless you rename, add, or delete accounts. To map accounts, when you click in the window, you will see a list of all active QuickBooks accounts. In this list, it starts with assets, continues with the balance sheet accounts. Down the list then would be income statement accounts. Alternatively, you can begin typing the name of an account, and the selections in the window will be reduced as you type. It is possible that you may need to map more than one account to a section heading. As you can see here with inventory, you can select multiple accounts, and Fiscal Checkup will combine the totals for these accounts. When you are done on mapping, click on Next. Finally, complete the import by clicking on Apply Import. Once the import is complete, you will see this note on the screen. While working through the wizard, you can go to any section by clicking on any one of the 6 tabs, or simply click on Previous Step or Next Step to go through the tabs one at a time. You will be automatically brought to the Company tab, and the company address information should be filled in from QuickBooks. To select the entity type, click on the down arrow and choose the appropriate one. Next, select either Private or Public Company. For the years in business, you can either type in the value or use the up and down arrows to reach the appropriate number. The first month of the fiscal year should have been imported from QuickBooks. To select something different, click on the down arrow and select the appropriate month. For the number of employees, you can either type in the value or use the up and down arrows to reach the appropriate number. Based on the data imported from QuickBooks, the calendar listed here shows how many years of data was important. It should be a minimum of 3 and a maximum of 5. The next section of the Company tab allows you to select up to 5 NAICS codes. The first industry field should be automatically filled in from the QuickBooks import. If you need to add or change a code, click in the box and you can type in a keyword and see all the options with that word. Or, if you know the NAICS code, you can start entering it. The more numbers you enter, the shorter the list. If you enter more than one code, you must enter the percentage of revenue from each code. The software will not allow you to continue if the total does not add up to 100%. To delete a row of data, simply click on the minus sign. That completes the Company tab. Now click on number 2, Income, or Next Step. The import from QuickBooks, combined with your mapping of accounts to fields, should pre-fill in the data cells that are relevant for your business. If cells are not filled in, you may want to go back to the mapping step and map your accounts to the correct cells. Fiscal Checkup saves these mappings so you will not need to do them again in the future. Just so you know, every line on your income statement is not listed here. The Data Wizard automatically fills in other lines to save you time. On this page, each cell must have either a number or a 0. When you hover your mouse over the category File Name, Fiscal Checkup provides a detailed explanation. The first is revenue. Nonprofits, distributors, and other business types might not have cost of goods sold. If this is true for your business, it is likely that there are zeros in these cells. The cost of goods sold section will be removed from the final report if there are zeros in these cells. Depreciation is related to the use of fixed assets. These numbers are important to calculate several financial ratios. Fiscal Checkup assumes all depreciation is included in operating expenses. If the company included depreciation as part of cost of goods sold, you will need to subtract the depreciation from the cost of goods sold on the prior line and add it to the operating expenses below. This was one of the fields that was supposed to have been mapped. Since amortization is an expense related to the write-off of goodwill and other intangible assets, it too is listed under operating expenses. Most businesses will have zeros in these cells. Excess owner's compensation is the amount paid to the owners over and above a normal salary. Data shown here will also increase the business value since the new owner might not continue to withdraw this excess compensation. If the owner is a full-time employee and their compensation is commensurate with their industry and position, it would be appropriate to have zero in these cells. The lease expense is for rent or lease on real estate that the business uses. It does not include any equipment leases. The total operating expenses is the sum of all SG&A expenses, including the expenses listed above for depreciation, amortization, excess owner's compensation, lease expense, and any other operating expenses. Note, it should not include interest expense, which is a non-operating expense. If there's outstanding debt with an interest expense, the amount of interest paid will be shown here. The next line is net profit before tax. If the entity is taxable, the income tax expense should be listed here. If distributions or dividends were made to owners, they should be shown here. If there were any adjustments to the equity from your accountant's review, you may need to enter them here. This line is for accountants to make appropriate journal entries when needed. When all the data for the income statement has been confirmed, click on number 3, Balance Sheet, or Next Step. The import from QuickBooks, combined with your mapping of accounts to fields, should pre-fill the data in the cells that are relevant for your business. If cells are not filled in, you may want to go back to the mapping step and map your accounts to the correct accounts on this page. Just so you know, every line in the balance sheet is not listed on this page. The data wizard automatically fills in the other lines to save you time. On this page, each cell must have either a number or a zero. The first line should be filled in from QuickBooks. It is cash and equivalents. For businesses that extend credit in the form of receivables, the net amount outstanding at the end of the fiscal period should be shown here. Inventory can be comprised of raw materials, finished goods, work in process, labor, and other possible accounts. Inventory was one of the mapped fields. Make sure the total is correct. This line should show the total of all current assets or short-term assets, including those listed above. Total property, plant, and equipment is the total original value of the assets. This is the gross value, not the net value after depreciation. The total accumulated depreciation is listed here. When deducted from the previous amount, Fiscal Checkup will calculate the net PP&E. This is the total assets, which should be identical to the total liabilities and equity on the other side of the balance sheet. If there are outstanding long-term loans more than 1 year, the amounts due in the next fiscal year should be shown here. This is referred to as the current maturities of long-term debt, and it's the amount of the loan due in the next 12 months. Remember, no interest is included in the maturities of long-term debt, only the principal. The amount of outstanding invoices is listed as accounts payable and shown here. Any short-term debt or notes payable due in the next year is listed here. This is the total of all current liabilities, including the accounts listed above. Term debt is the balance on any debt due long-term, which is more than 12 months in the future. Capital stock is the amount of capital paid into the company for stock. It usually is a number that stays the same every year. Retained earnings is the sum of the profits since the inception of the company. Total stockholders' equity would include the two accounts above, plus other equity accounts. Total stockholders' equity is a total number for all equity accounts. This is an important number. The wizard will make any needed adjustments. When completed with the balance sheet, click on number 4, Valuation, or Next Step. When completing a financially driven valuation, it is important to allow for adjustments to the financial statements in order to reflect the true value of the underlying assets and liabilities of the business. Note that for the first three variables, if the value on the financial statements is understated, then the adjustments need to be made as a negative number. For example, if the cost of goods sold listed in the income statement does not accurately represent the actual costs, enter the adjustment here. If the expenses listed on the income statement include one-time expenses not normal to the business, enter them here. Since we've entered a positive numbers, it means the values on the income statement were overstated. If there are any long-term liabilities that are not stated on the liability section of the balance sheet, enter them here. For example, if the company has an off-balance sheet liability like a lawsuit that they feel they will probably lose, place that here. This is probably unusual for most companies. If the inventory listed on the balance sheet does not represent its real value, then enter the amount here to adjust to its real value. For this and the next variable, if the value on the financial statement is understated, then enter the adjustment as a positive number. As buildings and equipment are depreciated or there's a non-depreciating asset like land, the values on the balance sheet might not accurately reflect their fair market value. If adjustments need to be made, enter them here. Note, it is rare that adjustments would be made in all of these categories on this screen. Click on number 5, Subjective, or Next to access the next section. The first section contains 8 subjective questions that are mandatory to complete the analysis because some of the data is used to calculate some of the ratios and the data from other questions are used in the competitive and market analysis. The first question relates to the concentrations of customers. The second question is about the growth rate of the company's primary market. The third question asks about market share changes in the industry. The fourth question asks about competitiveness of the company's product or service. The fifth question asks about how well the sales force is achieving their goals. The next question asks how knowledgeable the sales force is about customers and competitors. The next question asks about the selling organization and compensation. The last question asks about sales support. Answering the next 10 questions is optional, but answering them improves the completeness of the report. The first question deals with customer concentration. The second asks about internal sales control functions. The third question asks about the quality of customer service. The fourth asks about the frequency of customer orders. The fifth asks about the profitability of new sales versus repeat or old sales. The next question asks if there's any significant supply issues. The next question asks how cyclical the primary market is. The next question asks about the geography of the primary market served. The next question asks whether the product or services are custom or standard. And the final question asks about the average price changes in the last year. If prices changed, enter the average percentage change. When the subjective questions are complete, simply click on number 6, Projected, or Next Step. The next 7 questions in this section allow the user to stress test the forward-looking projections. It is recommended that the first time that the report is generated, no changes are made to the base assumptions. Note, under each value is listed the historic numbers calculated by the software. The user is able to increase or decrease these numbers and then view the effect of the changes on the forward-looking projections that are contained in both the executive summary and the lender's reports. You can change the sales growth percentage, cost of goods sold as a percentage of sales, operating expenses as a percentage of sales, the capital expenditures as a percentage of sales, the AR days, the AP days, and finally the inventory days. You can come back and change these values for the projections over the course of your license period. Click on Next to finish the input process. To generate the report, click on Preview Report. If cells have not been entered as a number or 0, you will not be allowed to generate a report. Go back and finish entering the needed numbers. The report will be shown on the left, with the table of contents on the right. You can click on any section of any report to preview it. The last section of each report is a free text field where the person preparing the report can add comments or an explanation before the report is printed. When you click on one of the advisor comments, it opens a window on the left-hand side of the screen where you can enter comments or clarifications. You can enter the comments now or later after reviewing each report. By checking or unchecking the box next to the title of each report, it will tell Fiscal Checkup whether or not to print the specific report. Only those with a check mark will be printed. Based on our experience, many finance professionals enjoy the detailed reports generated by Fiscal Checkup. Most non-financial professionals are quickly overwhelmed by the 6 reports. We recommend that only the executive summary be given to non-financial managers and that the other reports be used as backup or to answer questions. When you're ready to print, simply click on Download Report in the upper right-hand corner of the screen, and the report will be saved on your computer as a PDF file. Thank you for watching this video. If you have any questions or suggestions, please call or email us.